Hello and welcome to my channel, The Quality Investor. Earnings season has been a roller coaster for some businesses out there. However, today I'm discussing Fortinet, ticker FTNT. Last quarter, the market punished Fortinet hard after their earnings release, dropping them a stunning 23%. And what was their cardinal sin? They lowered their full year revenue guidance by $120 million. Despite that market irrationality, Fortinet demonstrated their strength yet again with another strong earnings release. I discussed as much in the video I did last quarter for their earnings. Yesterday, after the bell, arguably the leading cybersecurity company in the world, Fortinet, released their Q4 earnings. And yet again, they had another strong beat on their earnings per share. The revenue also came in at the top of that revised guidance at $5.3 billion for the full year of 2023. The story in the market was a bit different today. Fortinet finished up a solid 3.8%, confirming my thesis for their growth. So let's get into the earnings. But first, if you enjoy content like this, please hit that like button and subscribe to the channel. Also, don't forget to share this video and hit that notification bell so you can know right away when I post more stock analysis content. Looking here at that price chart, you can see that close price of $70.03, up 3.78% on the day. And like I said, they beat their earnings by 18.1%, coming in at 51 cents where they were expecting 43 cents. And a slight beat on revenue at $1.42 billion for the quarter versus an expected $1.41 billion. Looking at some of the full year highlights here, we can see that the service revenue increased 28% year over year. That's full year over year at $3.38 billion. That accounts for roughly 2/3 of their entire revenue stream. Not only is it their largest segment, we are seeing accelerating growth in the service segment. 4 years ago, they had 21.3% annual growth, 22.7% 3 years ago, 24.4% 2 years ago, last year at 26.3% to that 28% we see today. Another important metric they track here is their total billings. Now, a lot of this stuff is not recognized in the current period as revenue, and it's put onto the balance sheet on the deferred revenue on the liabilities section. However, they have billed twice as much as what they're making in service revenue and more what their total revenue is for the entire year. Also, we can see the very strong margins they have here. You have the free cash flow margin at 35%, operating income at 23.4% margin on a GAAP basis, at 28% on a non-GAAP basis. And again, very good earnings per share growth, 37% year over year. One thing I like about their earnings releases is they break out their number of deals. They had that on that summary page, but I wanted to show the detail here. You can see here they have number of deals by revenue threshold. And what we want to see here is that consistent growth. And again, they showed more very strong growth on the number of deals, especially in the high-end dollar amounts. Going over to the balance sheet, I want to show you that deferred revenue and just how much there is sitting there in potential income to be recognized later. $2.8 billion in current deferred revenue, an additional $2.89 billion in long-term deferred revenue. So they are set up nicely for the future with that recurring billing business model that they use. And looking at their statement of cash flows on the earnings presentation here, we can see it was down quite a bit for their cash flow from operations for the quarter, $191 million compared to $551 last quarter. And that resulted in a free cash flow at $164.8 million, down a little bit, as we can see, not only sequentially, but year over year as well. However, the reason for this isn't due to any extraordinary additional CapEx investment. They only had 26.9 in CapEx investment for the quarter. Essentially, Fortinet needed to increase their working capital needs for the quarter. You can see the accounts receivable, they went up $400 million for the quarter, and they did make a substantial cash payment for taxes at $250 million. In Q4. So again, they're growing at every phase of their business and they have a strong balance sheet. However, markets are forward looking. So what are we projecting going forward for Fortinet? Looking at my growth rate projections for Fortinet, year one, we're looking at $5.7 billion in revenue, and that is essentially the full year guidance from management, and I lowered it by a few $1 million there. And for operating income, I'm using what their operating margin guidance was as well, and I lowered that just a bit as well at 25.5%. Net income at 22.5% for the margin there, $1.64 for earnings per share, and free cash flow actually decreasing from last year to 1.7 billion. So I'm starting out on a pretty conservative basis here. However, I am very bullish for the future. I have their revenue growing at 11.5% compounded annually over the next 10 years. That's just a tick below what the analysts are projecting. Operating income at 14.3%, net income at 12.6%, earnings per share at 14.3%, and finally, the all-important free cash flow at 11.8% compounded annually over the next 10 years. I also expect their margins to expand to 30% for operating and 24% for net margin. You can see that is well below their 10-year historical averages here. So while I am being conservative, I'm also still very bullish on them. So coming over to the summary page here, we can see that their discounted cash flow comes in at $93.16, and that's at an 8% discount rate. And let me point out a few things here. Number one, right now at the current price they're trading at, $70.03, they're still at a 48 PE and well below their 5 and 10-year averages, both on the PE and the forward PE. They also are showing excellent profitability, way ahead of their 5 and 10-year averages for operating margins, return on invested capital, and return on capital employed. In fact, their returns on capital are so good, they're not only crushing their averages, they're well ahead of where juggernauts like Apple are in terms of return on capital. My exit multiple is at $100.49. And that is based on the following companies: Palo Alto Networks, Synopsys, CrowdStrike Holdings, Zscaler, F5, ServiceNow, and Checkpoint Software Technology. And the average PE for these companies is actually at 76.7. However, I am using the median 69.3 just to be a little bit more conservative. So that ultimately gives us a valuation average of $95.72, a potential upside of almost 37%. And with a 20% margin of safety, that's an acceptable buy price of $76.58. And I think it's very reasonable to be buying into Fortinet even up to a PE of like a 52.8. If you're even more bullish on the company than I am, a 10% margin of safety would give you an acceptable buy price of $86.15. In fact, today I did see some analysts raise their price targets to above $80. If you're very bullish on Fortinet, given that cybersecurity is one of the fastest growing industries and highly necessary in today's world, my bull case has them coming in at $113.24 for the discounted free cash flow with a potential upside of 55%. However, I would raise that margin of safety quite a bit. Even at, let's say, 30%, that brings us back down to about $76 where it is for our base case right now. So before we go, I do want to emphasize this is not financial advice, and I do own a stake in Fortinet. With that, thank you for watching today's video. And what do you think? Is my analysis reasonable for Fortinet? Am I being a little bit too bullish on them for the future? Let me know your thoughts in the comments below. Also, please hit that like button. And if you found this content useful, consider subscribing to the channel and joining our community. Thank you and happy investing.